Hi, everyone, and welcome to live market analysis using price alone. A quick disclaimer before we begin. So, let me ask you a question. Since we're talking about indicators here, what is the best indicator? For those of you here live, you can type that into the chat area. Maybe I'll have a look and I'll read it out. And for those of you who are watching the replay sometime later, think about it. Now, this is what I believe the best indicator is. Japanese candlesticks, which is price alone. You don't need anything else. Japanese candlesticks are a view on price, and they are an indicator. Believe it or not, we usually call this price action. Yep, good job. So here's our agenda. We're going to ask the question, why am I always wrong? And then we're going to go into professional chart reading. You won't find this in a book. I'm going to teach you a little bit about supply and demand because that's the force that moves every market, or those are the forces. And then we'll jump in to the live market and we'll look at maybe some of the futures markets, Forex markets, maybe Bitcoin, some commodities through the futures, maybe some stocks. If you have anything that you would like me to look at and you're here live, just, you can type it in the room when we get nearer to the time of going through the live markets. And then I'll open up for audience questions and answers at the end. Audience questions and me answers. So, for those of you here for the first time, here's a picture of me giving a similar presentation at the New York Traders Expo in person, and I was also invited to speak in China at the Bogo Investment Forum. And you will notice other well-known traders down here and hedge fund managers and ministers of finance. There's Jack Schwager down here. I'm over here. And yeah, so they came and invited me to speak. And it was in that session that I called the bottom of the dollar. And I'll show you that later on. And the dollar went to all-time highs from that. So a little bit more about me. You can read that, but just to know that TradeSmart is a trading education business, and we've focused primarily on teaching you how to read the market professionally and how to run a successful trading business, including how to develop your own trading plan and strategies which fit your personality and lifestyle. So let's get back to the first question, which is probably the first question you should really ask yourself when you take a trade and it doesn't work out according to your plan or didn't go where you wanted it to go, or maybe you got stopped out and then it did go. So how did I learn this? Well, when I first started trading, I was taught by I worked on a trading floor, and I was taught by two of the top traders who worked there, and we were taught how to spot what the New York Stock Exchange specialist was doing. And if the New York Stock Exchange specialist was buying, then we'd be buying. And we were taught to look at the prints and the time and sales and the order book of the specialist to actually understand what was going on. Now, these two traders used to, be up a tremendous amount of money every day in the first half an hour. And they taught me how to trade. Now, what happened was that if I used to call out a stop during the day and I'd walk past their desk, I'd notice they're on the opposite side of the trade. If I would call out Continental Airlines long, I'd walk past a desk, look over the shoulders, and see they were on the short side. I was the counter indicator, at least at the beginning, because as a novice trader, usually on the wrong side of the market. So this is when I started to really delve deeper into understanding. And again, I'll share with you more of that story as we go further on in this presentation. So why am I always wrong? So this is what the market looks like. And you may have been taught to use moving averages or whatever to notice that the market is going up. So you want to be on the buy side. So what many people do is they see the market moving up and they take a buy over here. This may be your first trade. And the market continues a little bit in your favor and you think, yeah. And before you know it, the market turns to the downside and starts to move down. And you look at the screen and you watch your P&L going into negative territory, bigger and bigger and bigger until you can't take it anymore. This trade was meant to work. I was up and now I'm down. That hurts. So what you do now is you take your first losing trade. You close the trade down, and now you want to make that money back. Can't be that difficult. The market's really going down, isn't it? So you take your second trade on the short side over here, but you double up because you want to make the money back. And quicker, if you get double the size, it's going to be double the money for every point the market moves in your favor. So the market starts to move in your favor a little bit. And then all of a sudden, the market turns to the upside again, and you take your second losing trade. This is not looking good. You feel you're being knocked around by the market. So you're convinced now the market's going up. I got it wrong. I'm not shorting. It's really going up. So you take your third trade over here, and then the market comes up again in your favor. And this one you've got like three times your money on because you really want to make it back and quickly. For those of you who relate to this, just type a yes in the chat area. If you're watching this at home, just smile or something, say, yeah, that's me. And then what happens in your third trade is, yes, you make a little bit, you see a positive P&L, and all of a sudden it goes to the downside, and you kind of look in, you know, disbelief at the screen. And then when you can't take it anymore, you take your third losing trade, and it's like not looking good. So you think now, okay, this is all in the first, say, couple of hours of trading for the day, and you're down quite a bit now. So what do you do now? Well, you take a step back and you learn something about support and resistance. And you think, oh, the market's range bound now. I've been buying up here, I should be selling. I've been selling down here and I should be buying. So next time it comes up, I'm going to take a sell side trade. So you take your fourth trade, you go all out. It's either I'm going to make all the money back or I'm going to blow my account out. And guess what? What does the market do this time? You're expecting it to go down because you've noticed the pattern. And this time the market just continues going higher. And you like throw your arms up in the air. Your account goes down to pretty much close to zero. You probably get a margin call and you close out your trade for a massive loss and you are pretty much done for the day and maybe done for your career as a trader, depending. Most people start with maybe smaller accounts and they blow their account like this, and then they refund their accounts and they do the same thing again and again and again. For those of you who have been there and done that, just type a yes in the chat area. And if you're watching this in the replay at home later on, just smile and say, yes, that was me. Now, what do you do about this? It's very frustrating. It seems to be once you figured out what the market's doing, it does something else. So what you need to learn about is these levels. Now, this is not, I mean, people call it support and resistance. I call it supply and demand. Supply and demand is the reasoning behind support and resistance, what causes the markets to turn in these areas. So if you can understand why the market's doing what it's doing in terms of price action, in terms of supply and demand, in terms of the orders in the market, in terms of the imbalances between supply and demand, and you understand when the market's likely to break and when the market's likely to turn, you're going to be in a much better place. I'm going to show you a little bit about how to do that during this session. I'm going to also illustrate this or demonstrate this in the live market from today. And maybe we could also look at some of what some of the markets are doing now and say what they're likely to do going forward and which levels are likely going to get hit ahead of time. And then you can go later on and check them out and see, did we do okay? We do this in our trading room every day, and I'm going to share with you how you can join that as well towards the end of this session. And we're right most of the time, as in probably around 90% of the time on which levels the markets are going to hit. And so once you know the levels, then you can take trades at those levels. And again, you need to have a trading plan to know exactly what to do with the trading strategy. Again, a trading strategy is part of a trading plan. It's not the whole plan. You need to know many more things besides that. And again, that's not the subject of this session today. So this is very, very important. So let's now teach you something about professional chart reading. Now, this is, as I said, my journey into trading started over 20 years ago. Actually, it started in more than 20 years ago in 1996 when I started working at Credit Suisse. But my personal kind of, when I personally started trading my own account was over 20 years ago. I started trading, learning to trade the specialist system on the New York Stock Exchange. And we were a very profitable trading floor. But what happened was the technology changed. And back then, it was really a human being specialist, but they became semi-automated. So they were computerized partly, and the system that we had learned to trade no longer worked. What do we call that? It's called disruption. So for me, it was back to the drawing board. The trading floor that I worked on closed down. We were no longer profitable, and I went to work for a different trading floor, different firm, and I had a new boss, and then I learned a new way of trading. And we went through, I tried many different indicators and everything else. I read many, many books, like most of you have probably done, and some of them were extremely boring, but I was trying to really get through them. I mean, other people may find them interesting, but yeah. So we were disrupted as a trading floor. I was disrupted, and what I'd put a lot of time and effort in no longer worked. So for me, it was back to the drawing board, and I had to come up with a way of trading that would stand the test of time. So much so that once I learned how to do this, nothing that would happen technological wise would ever disrupt. And this is what I'm going to share with you now. Okay, are you ready to hear more? I'm going to share with you. So this is what I uncovered and discovered about 20 years ago or so, a bit less. And I've taught traders over the past probably 19 years how to trade using this methodology, using this way of reading the market. And many of those traders have become successful, and some of them so much so that they're now training other traders themselves how to trade. So it's gone to the next generation down. I also myself right at the beginning taught a group of 20 traders with another two traders, and we came from different walks of life, but we all traded this same kind of way, which is kind of interesting. A very similar, we used to take the same trades. We used to go over the trades that we took at the end of the day, and they were almost the same entries, same targets, same stops, and which was very, very interesting because we weren't communicating during the trading day. And we took that group of 20 traders to success over around a 2-year period. And then that's how I got into starting to train others because people wanted to know, well, they're all successful. Can you train me? And this is how I started on that journey. So this is what I discovered. You only need really 3 things, but there are 4 here, yes. The 4th thing is the dimension of time. We call multiple time frame analysis. But on each time frame, the only things that you need are pivot analysis, which is our view of the trend. Okay, this is the way we look at trend, not using moving averages or any indicators, looking at the candlesticks and understanding the pivots. Now, again, we read pivots a bit different to the way that you will find maybe in the literature. It's slightly different. The way we read it is much quicker and will give you much better reading of the market and will help you understand what's going on way before anyone else sees it. The next thing we need to know is supply and demand. We need to know where prices are moving from and to, and I'm going to show you that in the market. We can know that ahead of time, where those imbalances are and where the market's going to move to. The market almost has to do that. So once you know where those levels are, well, that's probably where you want to take your trades at those levels. And then price direction analysis is a way of viewing everything you know about Japanese candlesticks with one way of looking at it, which will tell you ultimately what you need to know. Is the market moving up or down currently? What's the direction? Now, again, I don't know anyone else who does it like this. You won't find this in any books. Maybe if someone, I've been teaching this now for many, many years, but it basically tells you within seconds which direction the market's currently going in. And wouldn't it be a good idea to know, for example, say you're in an uptrend and you know how to identify that, and the uptrend is in currently pulling back, it's moving down, and you hit a demand area and the direction changes from down to up, wouldn't that be a good indication that the market may continue moving in the direction of the trend. So these are the way that we put them together. And we do this also on multiple time frames. Now, here's the key. This is nothing to do with strategy. This is to do with reading the market. If you trade a strategy and you don't know how to read the market, it's almost the same as knowing how to drive a car, but not knowing how to read road conditions. You don't know when you come to a traffic light, where a red traffic light means stop. You haven't been taught that. So you just drive your car, which is like running the strategy, and you wonder why you have a crash or, and you put your hands up in the air and go, oh, I've been taught this strategy. Yes, you have. You've been taught how to drive a car, but you don't know how to drive a car on the road. So it's the same thing when you learn a strategy and you focus, because what everyone wants to learn a strategy. But if you learn a strategy by itself without understanding how to apply that strategy into the correct conditions and meet the market conditions, you're not going to succeed. Okay? Go and ask yourself now if that is you. You learn a strategy and you wonder, why is it not working for me? Well, because you probably don't know how to apply it in the correct market conditions. The strategy probably works, just like the car works, but you're not trading the strategy by itself in isolation. You're trading it within a market that's moving. So you have to know exactly when to apply that strategy under what market conditions and have an expectation based on market conditions. As in, you have to align yourself with market conditions, much the same as if you're driving, you have to align the way you're driving to road conditions, to weather conditions. Does everyone understand? Very important. So here's the key, and here's the key to everything. And this will free you from running after strategies and everything else, because this is the foundation of trading. This is what so many people are missing. And this is probably, I believe, the main reason why people aren't successful as traders. And then they blame it on psychology because they're not doing it right. You have to understand the principles on which markets move and then apply your strategy under those conditions. So here's the key. This is a framework to read any market, anytime under, it doesn't matter what the market is. This can be used in every single market that you can chart. You can look at Japanese candlesticks charts. I've used it in the property market. I've used it in all the commodities markets. You can use it in the Forex market. It does not matter. On every time frame, from a tick chart, 1 minute chart, to an hourly chart, daily chart, monthly chart, you can understand what's going on very quickly once you know how to do this in any market under any time frame. So this is the key. The charts will teach you all you need to know once you have a framework for reading them. So learn the framework, and then you're free. You're free to learn. The market's going to teach you. You'll be open to learn the market, but within a framework, much the same as learning any discipline. If you want to become a doctor, you've got to learn basic medical sciences. You have to learn physiology, biochemistry, and all the other major main subjects. You wouldn't want a brain surgeon operating on you who's just learned how to do brain surgery but has never learned physiology or biochemistry or anatomy. You would not want that. They've learned one strategy, one way, one operational procedure. You wouldn't want a doctor. I mean, they're not a doctor, but you wouldn't want someone performing an operation on you or your child or your grandchild with those credentials. So why do you come to the market with the same credentials? I know one strategy, but you've got no idea how to read the market. You haven't got the foundation. You're learning one very small thing. And let me tell you, the chances of success are, well, go and look at what the chances of success are. Go and look at the statistics in the market. The majority of people fail, and that is a problem. Imagine if you went to medical school. You got into medical school, and imagine if you look at the statistics for one of the top medical schools in the US, and the failure rate or the success rate was 5%. Wouldn't you ask questions? Isn't there a problem with the medical school? They're not teaching properly. Have you never asked yourself, why is that? So listen carefully, and I'm going to share with you this. So these are the things that you need. Pivot analysis teaches you how to read the trend. Which way is the trend? It's one of the foundations of reading price action. Supply and demand tells you where price is moving from and to. Price direction tells you the current direction price is moving in on whatever time frame you're on. And multiple time frame analysis enables you to zoom in and zoom out. And once you've got that framework, the charts are going to teach you everything you need to know about how they move. And you will be aligning yourself with the market as the market moves on a day-to-day basis. And if you come and join our trading room, you will see that in action on a day-to-day basis. You'll see how we prepare ahead of time at the beginning of the week. And you'll see how we zoom down into each day and how each day follows on from the previous day. And we know exactly what we're doing. So let's go back to basics. And I'm going to teach you something here. And if you look in the books, you'll see that a candlestick like this is called a hammer, and this is a shooting star. Okay, let me ask you about this candlestick on the right. And for those of you who are here live, you can type it in the chat area. Is this candlestick bullish or bearish? What have you been taught about this candlestick? And again, you can type it in the room. I asked this question at the New York Traders Expo to a room full of traders that I showed you a picture of at the beginning. And almost everyone put their hand up saying bearish. Bearish, 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 bearish. Now, the real answer to it is it depends. Remember what we said at the beginning? You need to know the context. What is the context of this? Now, let's have a look. Here's an example of the dollar Swiss. And you see here the market moving to the upside. And then you see a candlestick like this. Is this candlestick bullish or bearish? Type it in the room. Is it bullish or bearish? Is the market going to reverse now and go down? It's had 1, 2, 3, 4, 5, and then the sixth bar up. It's an hourly chart. Has a candlestick like this. Is this market going up or down? So most people said down, it's bearish candlestick. So let's have a look and see what happens. What does the market do? And what does the market do? So really, this candlestick is a bullish candlestick. And when people see this, look what the market continues to do. When people see this, most people think this, which is incorrect. This is a bullish candlestick. Now let's go through the 3 ways of analysis, because we're looking at one time frame, and ask the question. And the beauty of asking the question when you're looking at 3, there's always going to be a majority, and the majority rules most of the time. So if you get a majority saying one direction, or all 3 saying one direction, you can be pretty confident that the market's going in that direction. So let's look at the 3 things that we know. From a trend perspective, here's a higher low, this is a higher high. What's the trend doing at the moment? It's going up, so we expect it to continue. From a supply and demand perspective, this was a supply zone. This bar pierced through it. So the next supply zone is here, which is where we pull back to. So there's nothing until here, and then we've got another level up there. These are levels that we mark out ahead of time. It's not done by an indicator. It's done by hand. And that will teach you how to spot those levels so that you can look at any market and you can see it instantaneously. So from a supply demand perspective, the market's moving higher. Now, from a price direction perspective, the market is pointing to the upside from here, from this bar here. Now, I'm not going to go into details about how to see that, but the market's pointing up. Even after this bar closes, the market is still pointing up. So if we ask the question for the 3 ways in which we view the markets and we analyze the markets, what is the trend doing? It is going to the upside. What is supply demand telling you? It's going higher. What's direction telling you? We're going up. So what are you doing? Are you selling here? No, you're buying. And this is how the market played out. We did this in our trading room. This was from 2018. So with this in our trading room almost 7 years ago. And this is why I took the pictures as it was playing out. And I told everyone in the trading room, this is a bullish part. Do not think of selling. Actually, be on the buy side. And look what happened. So let's go a little bit into supply and demand. Let's ask the question. Again, like everything else in life, you want to learn the principles first, the foundations. Before an architect puts a building up, they need to put foundations down. Before an engineer builds up, they have to build down. You need to make sure that whatever you build has solid foundations underneath. Otherwise, it will not stand the test of time and it will fall down. It might look pretty and look good, but ultimately, if there's a crack in the foundation, it will fall down. I had a trader a number of years ago who had a crack in his foundations. I'll tell you the story. He was someone who worked for the firm that I worked for, and he was trading his own account. And what he used to do when the market went against him was buy more shares. And ultimately, this has worked for years for him. It would ultimately go up. So he'd average in and end up, holding the position until it eventually went positive, and then he'd take profit. So he'd build a bigger and bigger position. But there's a problem with that trade. The risk on the trade is not known, or is actually his whole account. Because what happens if the stock goes all the way down and doesn't come back? And guess what? This happened to him. And the stock was Lehman Brothers. Lehman Brothers went to zero. And he was holding a massive position and buying it as it was falling down. It never recovered. He lost over $1 million on that trade, and it wiped him out. You don't want to ever be in a position that has a flaw in your foundations. There was a flaw. It might work for many years, but the one time it doesn't, it's going to wipe you out. And you don't want to ever be in a position from a money management perspective that could happen to you. It's not worth it, because it will happen at some point in time. It's not likely to happen on a day-to-day basis, but the one time it does is going to wipe you out, and you don't want to ever be in that position. So let's go through supply and demand. Prices will always move higher when demand is greater than supply. That's the law of nature. Prices will always move down when there's more supply than demand. So up when there's more demand, down when there's more supply at any particular price level in any market. If there's more willing buyers at a certain price level than there's willing sellers, I'll give you an example. You go into a shop and the first 100 items, say you're buying, I don't know, whatever, a bar of soap, and the first 100 items, it's on sale for $5, and then it's going up to the regular price of $10, yeah? So you want to get it at $5, but you're number 101. 100 people bought it already. So there's none left available at the $5 mark. So what do you have to pay if you want that bar of soap now? If there's demand, there's no more availability at that price level. So it goes up to the $10 price. That's how supply and demand work in the market. And it works the other way on the sell side as well. So price moves sideways when we have an equilibrium between supply and demand. That's where prices stay the same, and they could stay the same for years, especially in the property market. And then suddenly there's a big demand, the area becomes popular or whatever, and suddenly there's a more demand and prices start going up. That's the case in every market. So let me ask you a question. What moves markets? Imagine the market, people say, oh, the news moved the market. Great, there's different news every day. And if you listen to the news, they'll tell you whatever the news of the day was the reason why the market did what it did after the fact. Isn't that interesting? Whatever the market does, look at the news and put the two together, find something that caused it. That's very good to know after the fact, isn't it? But what really caused the market to move? Because if the market was closed, like the stock market, and good news came out, what would happen to the stock? Absolutely nothing. So it's not the news that did anything. It's people that trade the market. It's the imbalances of supply and demand in the market that move the market. So supply and demand is what moves markets. And you know what the beauty of basing your foundation of trading on supply and demand? This will never change. It doesn't matter what happens technology-wise. It doesn't matter what algorithms are trading the markets. And I come from an artificial intelligence background many years ago. I was programming neural networks in university many years ago, doing brain research on the hippocampus and play cells. It was at University College London in the late 90s, well, kind of mid to late 90s. And modeling the hippocampus and play cells, which were discovered by a guy called John O'Keefe, who got the Nobel Prize for the discovery of play cells, which are cells in the hippocampus that fire in the brain, neurons that fire when you're in a certain location. So your brain has a map of the location. So I modeled that using neural networks and used it on board a mobile robot to teach a mobile robot the first part of the navigation problem is in where am I? Which room am I in, for example, and where's my location in the room? So the first thing you need to do when you're navigating is you need to know where you are. You need to localize yourself. So you need to know where you are on a kind of, it's called an allocentric a coordinate system, means an XY coordinate system. Anyway, I'm not going to go more into that. But the beauty of this is supply and demand is that it will never change. You'll never be, it doesn't matter what happens technological wise. Markets will always move based on supply and demand, whether through algorithms, whether through people trading them, it does not matter. So your job is to identify where is that supply and demand on the chart. And if you know where that is, you'll know where the market's moving from and moving to. Everyone understand? So let's go through a little bit about supply and demand. This is touching on the very, very basics. So when you have a market that's going down and then it suddenly turns and you have a move up, preferably a big move up, then you know that the area where it turned, there must have been more demand than supply over here. Otherwise, the market would have continued going. Remember Newton's laws, bodies in motion remain in motion until another force acts on them. So this is a force that acts on it and changes the direction to the upside. And when do markets come down? Where they hit supply, where there's more winning sell orders up here than winning buy orders, as we said earlier. So your job now as a trader is basically to identify high probability turning points in the market. And I'm going to show you a little bit about how to do that. Now, there's a caveat here. It is recommended that you at least go through some of our training. I'm going to share with you how you can do that. If this is resonating with you and you say yes, and you want to learn how to do that, I'm going to share with you how you can learn how to read the trend the way I do it, the way I've trained many people. I used to train institutional traders how to do this as well. Believe it or not, big traders that had, value at risk per trades of $1 million, and they taught exactly the same training. So I'm going to share with you how you can do that. And also join our trading room for 1 month to see what we teach is how it's put into practice on a day-to-day basis. And you'll see how accurate we are and how you can do this too as well once you learn how to do it. So who's ready to jump into the live markets now? For those of you here live, just type it in the chat area and then we'll pull up the live charts. Now, so let me show you today what happened here. Now, this is very, very interesting on an intraday basis. And I'll wind back to what happened. So we traded the US Open, which is always local time in every four. It's a Forex market. This is the euro dollar, which is one of the most traded markets in the world, actually. So 8 o'clock happens and we are seeing this at 8 o'clock. So I'm looking at the market here and I'm saying we're in the middle. So there's nothing really to do here, but I have a level above me here and a level below me. And the market's moving to the upside. This is a very interesting level. I'm not going to go into the details of why these levels are, but remember, not every area is marked out. Yeah. So I know currently the market's pointing to the downside. Yeah, this is a live market today. And this is what, so I said to the trading room, and again, if you come and join our program, you can go and watch the recording of this as it's happening, because this is what we saw. We didn't see what's going to happen. We saw a level here and a level there. And we said the market is bullish. So if you want, you can trade it down to here as a scalpy type trade. So wait for it to push up into this area and then maybe go down here. And when it hits this area, this is where you want to go long and then take it up to there. So let's see how the market played out. And this was the plan if you were trading the euro today at this time, what to do. If you were trading this day, then the plan was to trade it on the long side on a pullback here. But you had to wait. There was nothing to do here. You had to wait for it to, we were looking for it to maybe go down here, but it turned direction here. So from this bar, you're buying a pullback and you're taking it up here. That was yesterday's trade. Today's trade was take it down here and then go long and come take it up there. Let's have a look and see what happened. So the market goes up on a lower time frame, giving you an entry here. Where we're taking it to? Down here. You see, it almost gets there. And again, we're getting out a little bit before the zone to make sure. we get hit. Okay. So the market now turns around. And where do we go next? We just hit this area. So we go down to here and then we go up here. This is how the market played out today. And this is what we saw beforehand. We saw a level up here and a level there. Look where the market is stopping. If we go onto a smaller time frame, you can see, you say on a 5-minute chart. So you can see pretty spot on. Why? It's also an upward moving market. Now I can show you a few other examples. One of the most beautiful examples, and this is my son called me up and he says, "What?" And I told him to buy this. And I want to show you something here on the yen. This is the yen futures. And again, it's a very important market to watch. So you can see this level here. I'm going to give you an idea for a potential long-term trade that we've been talking about for a long time. So we're talking about this eventually breaking this area and going up to here. This is a monthly chart, so it doesn't happen immediately. But what we had this week was something very, very interesting. You see the market, this is a weekly chart, and the market comes back down to this level. I want to be a buyer at this level, but I don't know how far it's going to go in. But what happens at the beginning of the week? The market gaps up. So I know if the market gaps up, the market's going higher this week, at least initially. So I want to be on the buy side. Now, if you go down, and you can see it here on a daily chart, the market gapped up. So you want to be buying a pullback, and this is your first target area. You're going to take out this high. This is what we said. When it comes here, we're going to pull back and maybe get a bit choppy, and it may go higher or it may pull back a bit more. I don't know, but I know the first move of the market is going to be up. So how do we play this intraday? I traded this by trading the euro yen and the dollar yen on the short side, timing with this. So let's have a look. On Monday, now I wasn't trading at this time, but this would be the best time to get in the trade is on the pullback, gapped up, pullback. This is a base. I know it's going up because of this bar and because of this. And because the market gapped up. So you want to be on the buy side. I actually got in on a pullback here during the London session, this pullback. And I went short at this point, and this was the day trade, was to take the trade up from here. Now, you can, if you want, short this, but it's an upward moving market. So you sit through this, come back on Tuesday and wait for it to hit the level over here and wait for it direction to change over here. And the same thing, London session, you're going long again to the next level up. Now, today, what you're doing, same thing. It's getting a bit choppy. It's coming down. You wait for it to come to this level over here. Oops. To this level. It's not exactly the same as that, but you get an entry. You get a from 3 o'clock here. So you're buying a pullback and you're taking up to the next level over here. And now we're getting choppy because we're at the into the supply level on the daily chart. You can see that. You can see it's getting, and you can see how the market moves. It pulls back, breaks to the next level. You can see how we're bouncing between levels now. This level and this level that we broke and closed above, and we're holding here, and we're going up and down, trapped now between two levels like a pinball machine. Okay, so let's go. You want me to look at euro yen? So let's look at euro yen. Okay, this is absolutely beautiful as well. So I've been short this week. Now, why? Look at where we are on the monthly chart. Now, look at where we are on the weekly chart. Look at this level on the weekly chart and look at where we are. We've been long all this time, all the way up here for the past 8 weeks. We're on week number 9 at the highs. So what do you think the market is going to do, especially when the yen looks like it's going up? Now, it's not super simple, but we have broken trend here, but we're still holding this level. It may end up, I mean, we've broken because we've got a lower high, lower low, but we're still holding this area. We've broken here and we're still holding here, and it's still kind of wiggling. So long as we don't take out this high at the moment, or by the end of the tomorrow, this high, we're going to probably go down. But you can see, so how do you get into this trade? So I'll show you. It's the same thing. Look what, on Monday, the entry was here, but I missed this entry. So I waited for it to come back up and took it here on a 15-minute chart back into this area and took it all the way down. That was the trade on the day trade. Then it comes all the way back up the next day to here. So This is what I call a reversal bar. So now I'm shorting this move up and taking it all the way down until direction changes. Now you're done. Today, what you're doing, same thing. You wait for it to turn here, and then you're shorting. There's a few things that I wait for. You don't have to wait, but I waited for this, and then you're shorting this move up and taking it down to the lows again. And then if you want, I'm not taking this trade because I'm looking to short it again. This one's going back up again. You see, just like it's done every time, it's giving you opportunity potentially to short. So long as it doesn't take out this high, you can short moves up to after, to supply levels, just like we did here and here. We've got this one marked out. So if it comes here and turns, short it and maybe take it down to this level. This would be the next level down. You see this down here? Hasn't been there yet. We've been at the slightly higher level over here, which is really into this drop. This is a little bit of a sign of bullishness. So it could be that we go up again. So that's the euro yen, and the dollar yen's pretty similar. Let me show you something else as well. Yeah. Again, we can look at any, but let's look at Bitcoin. That's another interesting one to look at. Now, Bitcoin, I'll show you the same thing that we did. We did this in, again, if you join us, you'll get all these trades ahead of time. We've been talking about going long Bitcoin all the time. So this is the same thing that I showed you before. This is a base. There's your clue we're going up. This was where we called a long entry on this week. So buying a pullback after this week, or you can get in down here, but there, notice the gap up again, telling you we're going higher and adding to the trade. We know it's going to break this time and continue. So if you missed that trade, where's the next opportunity to buy? So I said this into my trading room. This is a level that we want to buy at. Don't buy anything up here. We're in the middle of nowhere here. Down here, wait for the market to come. I called out, I said 75,000 is where you want to get in and then hold it. We're talking about buying this market, not selling this market. We want to buy moves down. Wherever it pulls back and goes down, you want to look for the next buy. You can sell it if you want and take it from here down to there, but you have to know exactly what to look for. So you can see the market's going down. So we said, you can, if you're accumulating, buy on the drops, but why not buy it exactly down here? So we said 75. It's not there yet, not ready yet. So we're not getting in the middle here. So we're waiting. Bingo. This is your long entry. Long entry at 75. We're looking to take out the highs now. Look what happens. And you can still be holding it. Now we may pull back again, but that's a massive from 75,000 up to the highs of 123 with it's a $5,000 risk, but $5,000 for, for well over 25, 35, almost $45,000 for $5,000 risk. That's a pretty good reward to risk. But if you're buying to accumulate this, and again, we've called this since this market started. This is the futures market of Bitcoin. But again, you can use it to trade the underlying if you wish. But this is how we look at the market, and this is what we do on a day-to-day basis. So let me look at one more market. Let's see. Did we look at gold? Gold's another very interesting market. Again, we've done the same thing. We've done the same thing with gold. I'll show you exactly the same thing from way back here. We called gold long at the bottom of this base, over here, on this pullback, over here, over here, over here, over here, and all the way up by the pullbacks. And, after this month close, we said it's a long. There's your stop. In here at the beginning of the month, put your stop. These are long-term trades. These are accumulating. And you can see if you would have, if you were lucky to get into gold around the 1,200 mark, look where it is now. It's almost tripled in price. So these are long-term trades. And again, there's different ways of trading. We have some of our traders who actually move money to, I'll give you one example. Yes. We have one of our traders who traded this, and we caught the bottom down here. So she bought US dollars. She lives in Canada and she moved her money to US dollars over here. And over here, when the market gapped up and started coming down, we said, this is the top. And it was. On the move down here, she took her and moved her money, part of her money back, half of the money back into Canadian dollars. So this is a profitable trade that took a couple of years or just over, maybe almost 3 years from here to here. So you can, instead of holding in one currency, once you understand how these markets work, you can actually move money, and most banks allow you to hold, or different, you know, you can hold in different. Why not hold in a currency that's going to go up? Why hold American? Why hold Canadian dollars if the Canadian dollar is weakening against the US dollar? But when it get, and knowing when to move it back. So instead of, so you can make money on the exchange, if you see what I mean. So there's different strategies that you can do and the way that you can do that. And again, dollar has been going. This is the same process. Look at this. This is a downward moving market. This was an upward moving market. That's just broken trend. So the upward moving market here, when you understand trend, is where this downward moving market continues. Look, until it doesn't. And this is the same concept. This is a base breakout bull trap scenario that no, I'm going below the base. Again, you'll learn all these things. I repeat them again and again and again. I point them out as they're happening in the live trading room every single day on every time frame. If we see big, these longer term trades from here, I said it's now time to short at the beginning of the year, short the dollar. That's it. I mean, we've been short the dollar the whole year since the beginning of the year, since February. So again, we'll discuss them, we'll explain exactly why, and then you'll understand how to do this yourself, and you understand the reasoning behind it. It's not just a strategy, it's reading what the market's doing, how you get in and out of the market. That's the strategy. Reading the market will tell you what you should be doing, what the market's doing, and where the levels are. So let me share with you a trader success story. So Jane came to me a number of years ago, and she didn't have any prior knowledge of the markets. She went because she didn't have any bad habits or anything. She just learned basically what I'm going to share with you now, the same thing. She learned that, came into the trading room, started to apply it herself, and went from beginning to consistent profits in 3 months. And she's been consistently profitable ever since. Her markets that she trades are the NQ. She trades the NASDAQ futures, and she became so good at it that other people in the trading community that we have on Discord wanted to learn exactly how she does it. So we set up a course, and she's been teaching that course now for the past number of years. And we've got quite a large number of people that have joined over the years and are being mentored on a daily basis by Jane in the Discord. And so you see, so she learned the foundations, specialized in the market that she wanted to trade, got so successful, people were watching her trade, that they wanted to learn how she does it. So we put, by demand, again, supply and demand, there was a demand. So we put a course on to teach other people, and other people have now been doing her course and have been successful in their journey or on the journey to become successful traders. And this is what she said about my training. All I can say to anyone who wants to consistently profit, just do it. That training turned my whole trading around. From that day on, my trading has been so consistent. It's really mind-blowing. Once you understand the levels, you can read the trend, you will beat the market every single day. However, the key is follow the pivot analysis, use the supply and demand levels, and adapt it to your own trading style. Be very disciplined, don't be greedy, stop when you've made your daily profit, and you will turn losing trades into winning consistently day in, day out. Simon's training can be adapted to any market. I'm any trader NQ. I use my own strategy based on Simon's education. I found the best thing was knowing what you were doing gives you confidence in your trades, and the fear of losing was gone. Trading had become a lifestyle, no longer a binary gamble or a nervous hope job. Believe me, it's the best and the only training to succeed with. Norman, having been duped in the past to purchase useless courses, I'd been reluctant to take the plunge. But having seen Jane trade, and indeed having spoken with you, I was satisfied that I was dealing with genuine people and not the charlatans who dominate the online educational space. I was not disappointed. The course was far and away the best online trading education I've experienced. My congratulations to you both on the course and your sincere efforts to advance your members' trading skills. So remember, the best investment you can make in life is in yourself. Even Warren Buffett says that. That was the best investment he made, was in himself, was in his own education. And as Jim Rohn says, for things to change, you have to change. For things to get better, you've got to get better, but you've got to let your knowledge lead to action. You've got to take massive action. If you feel good about something and you feel all inspired, then take action and don't regret at the end of your life that you never did it. There's, when people look back on their life and they didn't do something they know they should have done, that can be quite painful. But doing it and maybe, giving it a shot, you can't go wrong doing that. What's the worst case scenario? Well, you'll know if it works for you or not. But if you don't ever try it and you don't ever put yourself out there and take action, you'll never know. And maybe you would be successful. So now you've seen a simple and powerful approach to reading the market. Take it a step further and learn how to read the trend using pivot analysis. And these are the benefits. Trade in the direction of the trend. Remember the saying, the trend is your friend, but most people miss off the end part until the bend in the end. Know when the trend begins and ends, and make sure you're never fighting the trend and make sure you're on the right side of the market. We use the trend to determine whether the market's finished going up or down as well. And again, I'll demonstrate that on a day-to-day basis in the live trading room, and you'll see it in the training as well. Develop a profitable trading strategy or enhance an existing trading strategy. So here's my invitation to you watching. Time to take action. Join my How to Read the Trend training session and come and join our trading room. And this is what you're going to learn: how to identify the current trend, analyzing the trend in multiple time frames, exactly when a trend begins and ends, and how this knowledge will dramatically affect your bottom line. And you'll be able to watch us analyze and trade the live markets in real time. And you'll get ideas that you can actually watch the markets and look at those levels, the levels that we say, and you'll see them being hit. You'll see that the plan that we say ahead of time will play out most of the time. And again, when you come into the community, ask other people in the trading room, how often does it work out? When we put out ideas about what the market's going to do and explain the reasoning behind where the market is likely to go and what it's going to do, and then you see it play out on a day-to-day basis, and then you start to learn how to do it yourself. Do you think that, ask yourself the question, would that help you move forward with your trading rather than just focusing on a strategy that someone else wrote that you've got no idea what it's based on and you don't have the confidence to execute because you never built it yourself? So here's what people are saying. Simon, this is phenomenal. I've been trading, studying for 3 years. Sadly, it's all been the wrong process. I've wasted tons of money, time, and effort. I've actively deleted all those programs, indicators, and now completely focus on what I've learned from your program. It's the only way to trade, and it makes complete sense. He is now a successful trader. He also did Jane's training and successful trading the NQ as well at the Cash Open. Both styles of trading. Tom, I wanted to say that what you teach in How to Read the Trend training course is brilliant. Before that, I picked up bits and pieces from different traders, but it was never joined up. Your course brought it all together in a very structured and algorithmic way. No guessing needed. The facts jump off the chart. Matt, the trading room is very helpful in understanding how to go through the process. I've been trading for 11 years and I've not seen anything like what you do. Love how simple it is. I mainly trade options with trades that last 30 to 60 days. I've been looking for something I could use to day trade for 2 years now. I want to round out what I'm doing with another source of profits. I have not been able to find anything I could execute consistently. I'm just paper trading with your system. I've been doing it for a couple of weeks now and I've had far better results than anything I have ever tried. So this is what you get in the training. It's about an hour and a half. I'm not going to say, oh, it's 50,000 hours. And you're not going to watch 50,000 hours of training. You might buy it thinking, yes, it's great, 50,000 hours. You want to have the minimum amount of time with the maximum amount of impact. An hour and a half. You could go through it immediately now if you feel inspired. Do the training. Do it now and come and join our live trading room tomorrow. It's on demand. You can go through it as many times. Jane went through the training over 50 times to really go deep into it, to understand it on a deeper level. 50 times. And look where she is now with her trading. You get personal access to me. You can ask questions in email after you've gone through the training. But more importantly, you're going to get 1 month access to our live trading, which is usually $497. Access to our online trading community 24/7 via a Discord server where you can connect with other traders. You can even trade with other traders if you like. Pair up with another trader and trade with them. Be trading buddies. Whatever it takes to become successful. We're a trading community. You don't have to do this alone. You can get help if you need it. You can reach out and ask questions in the trading room on a day-to-day basis if you wish. We can analyze what you're looking at. You can ask questions and figure out what you did wrong and learn from it. Remember, mistakes, if you learn from them, are not really are part of the learning process. The quicker you make the mistakes, the quicker you're going to learn. You learn more from your mistakes than you do from anything else. So so really understand that and enjoy making those mistakes early. I remember my first job out of university at Credit Suisse. My boss came to me, he goes, "You're afraid of making mistakes, aren't you?" I said, "Yeah." He goes, "I want you to don't be afraid now. You're a newbie. Make mistakes now. No one cares you're a newbie. They expect you to make mistakes, but learn from them." That's what that was my first pep talk from my boss at Credit Suisse back in 1996. This is what he said to me. What a great boss. His name was Greg. Best boss ever. Can you imagine that? A boss telling you make mistakes and learn from them. So this is our trading community that you can be a part of. And again, this is the offer. And maybe, and again, if you're watching the replay, the link will be below or in the underneath the video. If you're here, David will post it. The regular price is 994. That's 497 plus 497. But today you're going to get $497 off. So it's just $497. Go through the hour and a half training, come into the live trading room as soon as possible, see it put into action, start to do this yourself. We have a weekly preparation session on Sunday. Learn how we do it yourself, compare what you do to what I do, and then go and see, guess what? The market's going to teach you. Were those levels in the right place? Did the market go straight through your level or did it turn there? If you start to do it with confidence, you understand exactly why, and it starts to work for you. Oh, you're onto something. Now you can start writing a strategy, but not until then. So here's the link. You can type this into your browser, tradesmartforex.com, the number 4.com /promo. And this is again the offer. You join now. How to read the trend is $497. 1 month in the live trading room is 497. That's 994. But you pay today. This is the offer, $497. Let me show you quickly what it looks like on the inside. This is my website. And again, you go to the website, you click on members, brings you to members area. But if you come to this page, this is where, and you click buy now, you fill out your details over here. You don't need a PayPal account. You just need an email address. You can pay via credit card. This is just the processing. And then you come into the members area and how to read the trend is in here. The trading room is a separate membership site over here. And this is the session that you'll go through. You come and join the live sessions. If you can't make it live, they're recorded. You can watch the recordings here and the weekly preparation. We keep a rolling too this week and the previous week. So you can go and see what we said 2 weeks ago. And you'll come in here and you'll see everything. You'll see when the next session is. You come and join us tomorrow at 7:30 a.m. Eastern time. You click here to register and then it'll bring you in. To join Discord is over here. So that's what I have for you today. Hope you guys enjoyed it. And if you have any questions, you can type them into the chat area now, but I don't think we have time. So send me an email to simon@tradesmartforex.com. I answer all my emails and I try to do that within 24 hours, depending on when you send me them. And hope you enjoyed it. David, thanks for having me here. And I
Um,
really hope that you
I
learned something valuable that you can actually put into action with your trading and take the next
I
step.
I don't see Jeff in the room yet, so if you want to answer a question or two, we can take a couple
Sure.
minutes.
Okay, so fire away. What are you trading in the trading room? Forex markets, the spot markets, the futures markets, um, and we look at stocks as well. I was looking at stocks for my son. Whatever you want, but I primarily focus on the Forex markets. I was an equity trader, trade equities, futures, Forex, and whatever we can chart, we can look at for you as well. So whatever you're trading, but primarily the Forex markets. Yes, it can be applied to every market. You can apply it to options, to futures, it doesn't matter. If you're trading options, you have to understand the underlying as well. You have to understand if you're trading, the cues, you have to understand what the cues are doing. Yep. Or the spies. So again, every market, I used it on the property market. I got out before the crash. I saw it was the high way back when. I just about got out in time. I said it's time to get out. And the my financial advisor was trying to get his other clients out, but didn't manage to get everyone out. He listened to me. Go figure. I had a financial advisor who was listening to me because I knew how to read the charts way better than him. And this was way back when. So again, the key is this is the beauty of it. When you get rid of indicators, remove them from your chart, you become very sensitive to price action, to the price. And you start to see things. The market starts to speak to you once you know the language. If you're learning any language, think about this. If you're learning English, for example, you learn the structure of the language when you're in school, and then you learn various other things. But the beauty of it is everyone can express themselves using the same words in different combinations, using the same language. The principles are the same, the grammar's the same, but that you can express yourself in words different. So the same with the markets. You can express yourselves in whatever way you want in the market. That's the beauty of it, but you have to do it within the framework. Most people are taking other people's strategies that don't fit them, and they wonder why it's not working. They don't have a foundation underneath them, and they wonder why they're not making money consistently. And plus, you have to learn all the other parts of trading, not just the market. You have to understand about money management, risk management, trade management. You have to understand